afternoon, everyone, and welcome to this webinar on fostering open banking in Europe, the impact and opportunities of the SPAA scheme, which is hosted by the European Payment Council. My name is Gela Bošković. I'm the head of the Financial Data and Technology Association for Europe and the UK, and I'm your moderator this afternoon. As you well know, the SPAA scheme is making significant steps in advancing open banking across Europe, fostering competition and a competitive environment that drives innovation and ultimately consumer adoption, while also creating new revenue opportunities. And in this webinar, industry stakeholders will delve into the opportunities that the SPAA scheme offers and for a much more thriving and dynamic European payments landscape. I also want to remind you that there is a Slido on the side for questions. So we won't just be talking to you, we want to be talking with you. So as questions come up during the presentations, please submit them during Slido or via Slido, and we will address them during the Q&A portion at the end of the presentations. But during this webinar, we'll examine the SPAA scheme status itself with an update on current developments and challenges. We'll also be looking at two sides of the scheme, one from the asset holder side and one from the asset broker side, and their different perspectives as to why they're involved. We'll also examine market trends and growth insights, as well as key statistics and data around open banking in Europe. We'll also be looking at why one of the biggest card players in the world, Mastercard, is looking at open banking services and the motivation for them to be involved in the scheme. And we'll wrap it up examining why embracing open banking actually matters from an ROI perspective to front-running compliance and serving the end customer. And again, a reminder, Slido is important. There will be questions that come up. Don't hesitate to submit them. With no further ado, I would like to introduce the co-chairs of the SPAA scheme, who will be our first presenters, Arturo Gonzalez-McDowell and Gijs Boudewijn. A little background on Arturo and Gijs. Arturo is the co-chair of the SPAA scheme initiative, and before that, he was the CEO of Eurobit Technologies, which is a leading open banking account information service provider across the Eurozone and LATAM. Eurobits is a signatory to the Future of European FinTech, which has campaigned for fair access to under PSD2. And in the meantime, Arturo is also serving as the vice chairman of the European Third-Party Providers Association, the ETPPA, and represents them at the ERPB and at the European Payment Council. On the other side is Gijs Boudewijn, and he's the other co-chair. He's also the general manager of the Dutch Payment Association, and Gijs was previously responsible for payments and security of the Dutch Banking Association. Gijs is also currently the chair of the legal support group of the European Payment Council, as well as a co-chair of the SPAA multi-stakeholder group. He's also vice chair of the Payment Systems Committee of the European Banking Federation, and he holds the position of vice chair of the European Card Payments Association, and is also a member of the Payment Systems Market Expert Group at the European Commission. Clearly, we have two gentlemen that understand payments deeply, also understand PSD2 deeply, and they also understand the SPAA scheme and are going to address us next. Gentlemen, the floor is yours.
Thank you, Gela. Thank you, panelists, and thank you for everybody attending this webinar. I hope one of the things we'll be showing today is that SPAA is bringing us together, and Gijs and ourselves are not representing different sides, but are rather on the same side of the picture, thanks to SPAA. So what is SPAA? Basically, SPAA is a scheme for starters, and as most schemes, it follows the four-corner model. And it's an API-based scheme for open banking. So it is building on the idea that purely compliant and free open banking is very difficult to make it work, as we have already seen with PSD2. So what we're striving is to have a scheme that has a fair share of a fair distribution of value and risk between the scheme participants. That is, asset brokers and asset holders, which in your PSD2 world would be equivalent to TPPs and ASPSPs. So the scheme includes a set of business rules that allow these two actors, asset brokers and asset holders, to exchange information and transaction related assets between them for that fair distribution of value and risk amongst them. So what it currently supports is a very comprehensive set of functionalities that would allow it to be at least on par with the card world, and maybe then some functionalities. So you would be able to do anything you would typically be able to do in the card world with the card on file functionalities. And on top of that, you would also be able to exchange information. So what in PSD2 would be account information services. So it's a very comprehensive set of functionalities. I would say that it's the broadest set of functionalities that you would find in any open banking approach in the world. And as I said, it follows the four-corner model where you would have your four actors, plus if you just compare with other schemes, you might consider that the asset broker is a fifth actor. So you would have what you would typically consider consumers that have a relationship with their asset holder, with typically their bank. You would have merchants that also have a relationship with their asset holder, and you would have asset brokers making a link between the merchants, the consumers, and the asset holder of the consumer. In the case of information assets, the picture would be slightly different. But I think that for the sake of simplicity, we'll stay just with this one. And if we can go to the next slide, we can zoom in a little bit on the four-corner model. And as you can see here, we try to depict that the business relationship between the asset owner, which would be the consumer in most instances, and its asset holder is completely outside of the scheme. So this is a private relationship with business conditions that are outside of the scheme and is not of the business of the asset broker. And likewise, the relationship between the asset user, which would typically be a merchant in a transaction asset environment, as illustrated here, is also outside of the scheme, and it would be no business of the asset holder. And what links the two worlds together is precisely SPAA, where the scheme would rule the relationship between the asset broker and the asset holder, and there would be a number of business flows within the scheme. For starters, both the asset broker and the asset owner would have to fund the scheme, which is hosted and managed by the EPC, the European Payments Council, and that's what you see there as EPC scheme fees. And then the asset broker would pay the asset owner the default fees that are the transfer of value to share that value and risk fairly between the two scheme participants. If we go to the next slide, we can see the most recent milestones. But for starters, let me tell you that this is a project that started in January 19 at the ERPB. So it's a long way that has brought us here today. But I'm not going to bore you with everything that has happened since then, but just on the most recent and relevant milestones once the project was transferred to the EPC to make an operational scheme. So in June 23, we published version 1.1 of the rulebook, which is in fact the first operational version, because version 1.0 had all the functionalities marked as optional. Then we took the rulebook through the change management process of the EPC via a public call for possible modifications. Then the next relevant milestone was the publication in November 23 of the first set of SPAA scheme default fees, and trust me that this was a very complex project that I think it led successfully. I think it's probably the first exercise in the world where two parts of the industry are agreeing to find a fair share of distribution of value and risk amongst them. So once we had the default fees, it was time to start in February to think about launching pilots. We agreed on a workshop where a large representation of the industry was present to aim for a tactical pilot, which is currently underway, and a strategic pilot that is scheduled for some time next year. We also called for a public call for API standardization initiatives for them to join the scheme. And I'm not going to go into the detail of all the different milestones. You will have the presentation available to go through them. But we're currently in the phase where we have a register of participants, where already 5 asset brokers have registered for the scheme. And we also in the phase of once the original objectives of the multi-stakeholder group were reached, we're now in the final stages of setting up a new multi-stakeholder group that will be published, I think, beginning of next year. So I invite anyone interested to join that call for participation. And with that, Gijs, over to you for the next part of the presentation.
Yeah, the way forward and challenges. So development is one thing, and I cannot enough stress how wonderful it is to, as a private initiative, building on top of dissatisfaction with the regulation, PSD2, in a multi-stakeholder environment is really challenging, but also very satisfying, because we now really have a very robust product, if you will, that tastes good to both sides of the market, which is really unique, I believe, and also has very much sympathy from the authorities. So coming from theory to practice means you have to become operational, and as Arturo said, piloting. But for pilots, you need pilot participants, and if you can't have pilot participants, you will not get to a live market status. We cannot enough stress that in the geopolitical context, pan-European, also open banking solutions and closed solutions are becoming more and more important. On the broker side, there is enough appetite, and we already have the scheme participants, as Arturo said, for several reasons. On the asset holder side, i.e. the ASPSP side, the picture is a little bit less positive, and we think there are some reasons for that. And not to complain, but most ASPSPs, the banks are flooded by regulatory initiatives that they have to digest, implement, etc. I will not name all of them. You can see them there. So it's not easy to come on top of the backlog and get attention at sea level for the importance of SPAA as open banking, on top of, let's say, the European Payments Initiative, to which it's complementary, we believe. So it's not so much that I believe there's a limited level of interest as such, but there's a limited possibility for the asset holder side to really prioritize it. And that's why we also have these webinars to create better awareness of why joining SPAA, developing SPAA is also for the asset holder side very important. Just going, the last bullet, instant payments, of course, is in combination with open banking, is of course the golden combination. Initiating instant payments in any context is of course holds the promise of really providing a pan-European solution as an alternative to the many domestic and or non-European solutions. And if we go to the next slide, please. So it's really time to understand that it's just leveraging the regulatory investments in PSD2 that have already been done and try to capitalize on those. So this picture, this slide depicts the investments already done to become compliant with PSD2, but as I said, that is not provided very satisfactory results in the market. That is why we have the scheme on top of it with all the functionality that is not in PSD2. And of course, the choice now for ASPSPs is to also in view in the perspective of PSR, which may or may not impact the functionality in the rulebook, just stick to the compliance only approach and of course, that's what we would advise, count your blessings and try to make some money. That's where the fair distribution of value and risk comes in. Try to monetize it. You have to be compliant with PSR and 2. And we believe it could be a small step from PSR compliance to SPAA compliance. And then we would all be happy, because that provides better results for the end users and also a revenue stream for the asset holders, where they have to provide everything for free under the legislation. I think that says it all, Gela. This, I think, was the last slide. Yes. Well, of course, this is just a picture which you can study at home. All the parties involved in this multi-stakeholder ecosystem, which is very satisfying. Apart from the MSG itself, we have also a broad interest group. I don't know how many participants we have in that one, but you can see there is a lot of interest. And the trick is, how do we kickstart it now? We are ready. Everything is ready. The default fees are there. The rule book is there. Just go, if you will. And of course, that's why we are having this webinar too. Over to you, Gela.
Thank you, Gijs. And there's already been a question around whether or not this webinar will be available. It will be. And all of the presentations are, of course, included in the embedded webinars, so you'll be able to see those and study them at your leisure. But we appreciate that it's a fast review of what the SPAA scheme is. And for more details, we do encourage you to visit the website, dig a little deeper, and if you have any questions, to please reach out. And we will make sure that all of those are addressed and that you have all of the insights needed in order to join the pilot. Thank you both, much appreciated. We're going to actually look at the two sides of the different coin, the asset holders and the asset brokers that both Arturo and Gijs alluded to. And we'll be looking at their individual stories. I'd like to start out with the asset holder side and introduce you to Christian Schaefer. He is currently the head of the payments at the DSGV, which is the German savings banks. Prior to this, he was serving as chair of the Digital Euro Rulebook and the development group at the European Central Bank. He's also held the position of director in the Deutsche Bank's corporate bank, where he led the global product management for payments, and has held various other regional and global product management roles during his tenure. And given that he's got quite a deep background in payments, as well as working on the banking side, specifically the ASPSP side, I'd like to welcome the asset holder who's currently enrolled in the pilot to present now. Christian, the floor is yours.
Gela, thank you so much, and a pleasure and privilege being here, since I had also the privilege to work with Arturo and Gijs in the early days of the SPAA development. And seeing this now going into real life is a big moment for me personally. Those of you who are not exposed to me to DSGV, you know, in Germany, the saving banks are locally independent banks, and we organize ourselves in associations, and at the head there's DSGV, having a couple of functions. First of all, we provide a spokesman for the German saving banks. Secondly, we have an arm that leads all the market advocacy efforts. And thirdly, that is my remit, we have the strategy arm where we organize the strategies for the saving banks in Germany. And in that context, I'm obviously running the resort for payment. Germany has a long history in open banking. There was a legacy standard implemented like 10, 15 years ago called FinTS. And for us, progressing to the next technology area, i.e. providing functionality via APIs, was a logical step. As it was rightly said by Gijs and Arturo, the whole SPAA scheme is meant to implement what was initially being built out based on PSD2. And when we did our initial work on this SPAA scheme, we worked with the market. We spent a lot of time with merchants, so with end users for the scheme to understand the requirements. We derived what are the most attractive user experience, user journeys. And from there, we derived the requirements for the different products that an asset broker could provide to this side of the market based on the assets available on the banking side, i.e. the asset holders. In our context, we have chosen to pilot for the dynamic recurrent payment. This is the most sophisticated set of transaction assets being proposed in the SPAA scheme. And it enables literally all the use cases that we have seen a few years ago and that we have seen now being relevant. They have literally the same scope, also strong overlaps to other initiatives that you see in the market, like EPI Euro or like the digital euro. They all build on the same customer experience. And from an asset holder point of view, the question is, what is your distribution channel? Do you have one distribution channel, which is your own app? Or do you have multiple distribution channels of your assets? And what we want to explore with SPAA is literally enabling a broader set of the market to get access to these assets and distribute it according to specific use cases and client groups. And in that respect, we are very excited to be part of this pilot to literally get things in reality. Now, options are always whether you do this on a national basis or whether you do it on a European basis. Our home market and our only market is Germany. But we know that many of our clients, in particular on the merchant side, they are European or global in nature. So they're not so much interested in a national German solution, but they're very much interested in a German solution, in a European solution. And hence we feel that SPAA is an extremely attractive distribution channel for ourselves. Yeah. The other thing which we found extremely attractive is the commercial model that comes with SPAA. While in the old days, PSD2, you wouldn't have any option to generate income, or in FinTS, the legacy standard in Germany was not an option to create revenue pools from it. We think now this is very different with SPAA. It's very different, and hence we also find it very attractive to get the whole things being piloted out. As it was said, I think, by Hans Eneturo, is the notion of open payments, as we call it, is the first step. Now there is more regulatory intent to go beyond the asset class of payments into other areas, which is coming with the regulation of FIDA. And we think it's now not only the time to leverage the opportunities in SPAA to address the need for open payments, but it's also a first step to go into a broader set of opportunities resulting from FIDA. And our organization strongly believes that the best way of learning things is to pilot them, to figure them out. And hence we are very glad that the EPC has launched this technical pilot, and we are very, very pleased that we on the asset holder side with DSGV can literally start as of 2025 with dynamic recurrent payment. We do it initially with this one fintech in order to have the complexity in building and testing the interfaces being properly managed. But we also want to use, next to the technical learnings, we also want to spend time with the fintechs being interested to get more insights on the market demand, on commercial interests, to then build our business case in the course of next year to go into broader adoption of asset brokers in the context of our implementation. And with that, I would kind of stop my little speech, and if it's okay already by now, open the floor for questions, or however you want to proceed, Sheila.
Christian, we're gonna do questions towards the end, but I appreciate that there may be some additional time, and in that sense, we'll have Joe give his counterpoint as to why the asset brokers are interested in participating. But appreciate that you've taken the time to detail why pilot, why look at the business case building into more of a strategic approach, and also getting closer with those asset brokers and understanding the various demands that merchants and end consumers have for instant payments and what that looks like across the landscape, not just from the European savings banks and their clients' perspectives, but more generally and cross-border payments as well. So appreciate that. Thank you. I'm going to now give you a little bit of insight into Joe Morley and why he's talking about this. He's the European CEO and General Manager of TrueLayer. They're European business focused, and he's based in Dublin. He's responsible for operations and commercial expansion across the European Union, including regulatory compliance and strategic policy regarding payments in Europe. And he currently holds the Central Bank of Ireland's pre-approved control functions of Chief Executive and Executive Director. And he's also a board member of the Open Finance Association. And Joe, can you give us an idea of why TrueLayer has been so interested in the SPAA scheme? I'm going to turn the time over to you.
Thanks so much, Gayla. Well, first of all, everyone will be very happy to hear already a lot of what Christian was saying we're very much aligned with. So I'll be talking about a lot of the same benefits and features of the scheme, but from the alternative perspective. So a little bit of information about TrueLayer, perhaps first, for those people who may not know us. We're a payments network providing alternative payment methods to online merchants to accept payments across a wide variety of use cases, everything from financial services through to e-commerce payments that we're all, or purchases rather, that we're all familiar with making online. The company would have began in the UK in 2016 with the advent of PSD2. And since 2020, really, we've been operating, expanding our payments business as an alternative payment method for online merchants across Europe. So we've about four years of data now, of the pros and cons and all of the benefits of open banking payments and bringing those cross-border payments, as Christian mentioned, to European merchants and consumers. I'll cover off a few points over the next 5 to 10 minutes. I think perhaps first we can talk about, as Gayla said, the benefits and importance of us participating in the scheme from an asset broker perspective, or TPP. For us as a payments network, we're constantly evolving our product mix, moving beyond the first basic kind of PIS, payment initiation services that were offered, into far more intelligent payments with added value for both the merchant and customer. So we're including things like identity verification, both account verification and identity verification. As Christian mentioned, the variable recurring payments, or dynamic recurring payments as we refer to them in the EU. All of this requires new API endpoints from the asset holders, and all of which requires commercial APIs. So the SPAA scheme provides us with that, and that's why we've been very interested in participating in the formulation of that from the get-go. Basically, it gives us those extra building blocks that we can provide to merchants, which they can provide to their consumers, which allows for more innovative and intelligent payments at the checkout for an online purchase. We were the first TPP or broker to sign up to the scheme. Again, we've been following it very closely and working on it with some of the people on the call. I'm very happy to do that. And one of the reasons why we were adamant to be in this project from the get-go was we wanted to make a statement that we were on the side of partnering with the banks, or the asset holders, as we call them here. I think as a payments network, whereby we're initiating payments from a bank account, the only way we can truly innovate and add some really interesting functionality for the end user and merchant to those payments is to partner with the bank where that account sits. So it does sound quite obvious, but sometimes it's important to reinforce the obvious nature of why it makes sense. So we're very much about partnering with the banks from that perspective. And I'll come a little bit as to why, overcoming some of the perceptions maybe around open banking providers and possible conflicts of interest with the banks that may have been around for a few years now. But I think also, I was asked to talk a little bit about the shortcomings and lessons learned, what we've seen operating in Europe over the last 4 years. And one of those was about, this regulatory framing of PSD2 as a kind of a regulatory imposition on the asset holders, in this case, or the banks. And I think, what we've seen is no matter how good the regulation is, and we've done a good job, and certainly with PSD3 and the new PSOs, there's some huge improvements there, but no matter how good the regulation is and the actual APIs themselves and the robustness of those APIs, both of those are only as good as the design of the retail banking app in our case, and the SCA flows, because really that SCA flow through your standard retail banking app is the door into open banking, and is the door into these payments, and is the door into unlocking all of the functionality that the SPAA scheme can provide us with. So that's a key observation for us over the last 4 years, that we need to continue to work and help the banks in this case in the cases where there are shortcomings there, improve that. It's a user experience issue essentially. So we can do all of this good work on the regulation, all of the good work on the schemes, and even making the APIs more robust. But it's very important that we continue to focus on the user experience and help the banks with that by sharing learnings as well. So this is another reason why we're very happy about the SPAA scheme, because, you know, providing a revenue generation product for the banks, or multiple products hopefully, will allow the banks to continue to reinvest in all of those areas that provides for a positive customer experience, particularly around the SCA piece, because again, that's the initiation of all of this. That's the door into these payment products. Lessons learned as well would be similar to that. It's you know, it's never a good starting point if you've been kind of relegated to the basement of API maintenance, let's say, or developer relations. You know, that's not a good starting point. And unfortunately, once you are in that place as a perception, or once you've been even relegated to a compliance problem to be solved, it's very difficult to change that perception and get into the other room or the other conversations, which is where we should all be, and which, when we've had these type of conversations with the banks and the asset holders, we've made a lot of progress. And that's when we start talking about, obviously, revenue generation, but more specifically, you know, reducing churn, improving cross-selling opportunities for the banks, providing new products. And all of these are almost indirect revenue generation lines. So that's a key learning for us. On the broker side, it's very important when partnering with the asset holders that you're speaking to the right people and that your message is resonating with the relevant teams at the banks that are measured on these metrics. So yes, there's an API behind all of it, and yes, there's perhaps a developer relations team, but ultimately, and I think increasingly with schemes and proposals like SPAA, we need to make sure that we're talking to the people at the bank who can benefit most from these type of initiatives. And when that happens, the conversation flows very freely, and there is no kind of conflict or mismatch or dissonance. It's of course, absolutely, this does make sense, you know. And then finally, this is just kind of wrapping up really my piece. I think the added value of the scheme is, you know, for the future, there is just enormous potential in a mutually beneficial partnership, both financially and from a product innovation perspective, for both the asset holders and the brokers, and coming together to build solutions together is what will really yield true innovation in the area of payments and alternative payment methods. Because, you know, from our perspective as a business selling payment solutions to merchants, it keeps our merchants happy because they have solutions that provide, you know, reduced friction, and reduce fraud and a more positive payment experience for their consumers. And also then from the asset holder perspective at the banks, it's keeping the bank's customer happy as well, because they're provided with a seamless payment solution direct from their bank account that they know and love, using the SCA that they know and love, and there are no other alternative third parties in the flow. So that means that the bank's end user our bank's customer has a very positive experience of being a customer of the bank and of using the banking app, and so hence that leads to a more sticky relationship for them and the possibility to sell and avail of more products. So when things come together and work as they should work, everybody in the ecosystem is benefiting from this, and that's why we're so excited about first of all initiating it, partnering with everybody as part of the stakeholder group, and continuing to invest and develop it. And we're very eager for more asset holders, obviously, to come to the table and to start working with us directly. And but as I said, you know, just listening to Christian, and you know, I've spoken to Christian before, where both sides are very aligned on the benefits and why this makes sense. So it's just a question of getting more of those conversations happening now, and start coming up with some tangible outputs, which we're very excited about. But that's in essence why we've joined the scheme, why we're excited about it, and just a little bit more context about how we've seen open banking payments evolving so far, you know, over the last 4 years in the EU. And that's my piece. But again, I'll be very happy to come in at the end and answer all of those questions. So please keep them coming in. Thank you.
Thank you, Joe. Much appreciated on that. It is very much around finding the mutual aligned benefits and aligned incentives. I thought it was quite interesting that you brought up secure customer authentication as that gatekeeper. And this is an opportunity for us to continue to refine what that looks like from a customer experience perspective, but also from a security perspective and how that is ubiquitously applied across payment instruments in the EU, ensuring that safety and security is first and foremost in payments, and that there is a trusted source of security and reducing a fraud risk across the board. And part of the impetus for the pilot is also to examine that under a microscope in a little bit more detail. So appreciate your perspective, Joe. Thank you. We're now moving on to what market trends and growth in open banking adoption looks like across the EU. And I'd like to introduce our next speaker. It's a very short introduction. I'm sure it'll take a little bit more time to introduce himself. But Federico Aondino, who is the payment practice lead at Accenture, Italy, Greece, and Eastern Europe, is going to give us some insight about what open banking looks like currently. Federico, floor is yours.
Thank you all. Yes. Nice to meet you all. Just a little bit of context in this interesting story that we've been talking about over the past few minutes. If you can switch to the next slide, just to recap to all of us that open finance is here all around the world. It's alive and kicking. So if you can switch the slide. All right. So we're talking about how to, of course, expand this in real life, beyond payments, beyond account payment information. And we all know about the stories of what's happening, of course, in UK, Australia, Hong Kong, Singapore, Brazil, all around the world. Everybody's experimenting in real life about how to put insurance in the game, services, pension services, other industry services in the game. So to expand what started also there as a payment and account data information play. So it's here and it's alive and kicking. If you can go to the next slide, we can just see a couple of numbers that just give a sense of what's happening over there. Of course, beyond the United Kingdom case, Brazil is ramping up very, very fast on that. Of course, there's a different market condition than what we see in Europe, but again, it's a sign of what can be done in a very short amount of time in terms not only of penetration around total population. We have 3.5 billion API calls per month, which is basically linked to 42 million active consents as of today. But more interesting about, if you look at the number of API products, we're 30 today. There's a plan to expand double digit by next year, and basically expanding as fast as possible towards as many use cases as possible beyond payments. So that's the path that's also happening in Australia, in other jurisdictions beyond the EU. So to say that, I mean, it's something that can be done. It's a matter of course, and that's why we're here, all of us talking today, of course, about cooperation and try to find an agreement of a scheme that can actually benefit every single actor. The second message that I want you to share with you is, if you can go to the next slide, is that of course, a focus on, as was said before by Joe and the rest of the participants, on practical and very concrete use case and money generating use case is crucial. We did an analysis here for some jurisdictions that actually wanted to start open finance from scratch today, and so we try to show them the art of the possible in terms of GDP penetration of all potential use cases that are, let's say, possible as of now, around the saving space, around lending and credit services, around lowering the fees for the population in terms of embedding payments within the purchase experiences, or managing better forex management, or variable recurring payments in the context of B2B and B2C payments. And most importantly, also increase operational efficiency for a systemic player or a set of systemic players, such as improving fraud scores for payments, or managing better, say, wealth management services, or any other back office cost reduction for either financial services players or regulators. So this is just, of course, a long list. There's many more to add on top of that. And it's, of course, the starting point, if we can switch the perspective from what we see as the issue, which is hampering the development of open finance in Europe, to a different place where open finance is actually alive and kicking. This is the perspective from which everybody should start, and everybody, of course, is starting. And the end game that we should target as the purpose of this call is all about. Just one hint, if I can conclude my my point here, on a very nice, let's say, point in time that we are living as of now, which is, of course, the introduction and scaling up of instant payments in Europe. And if we focus a little bit on the the bottom left part of this slide, so the opportunity to improve fraud score and fraud management, I do believe that this is a great opportunity for SPAA scheme to experiment and play a little bit of a game-changing role, because if we look at what's happening in the UK right now, actually this week, is actually the entering into law of this new regulation that basically is trying to level up the field of fraud management for instant payments. If we think about what's going to happen over the next year or two across the European countries in terms of new frauds happening and emerging in the instant payment environment, I do believe that it's a very nice playing field to experiment for new services, new use cases that can actually improve security and effectiveness of payments in the space. If you can go to the next slide, just to give a little bit of data points related to this point. This is a slide that actually pictures out the increase of faster payment frauds in the UK. It's public data that's actually pointing out to the fact that all the fraud use cases that you see on the right side of this slide were actually traditionally linked to card payments and are actually being migrating to the instant payments scheme over the past few years, and it's actually growing. So the idea of trying to manage such a huge transformational shift, including all the benefits and risks that this brings to end users and banks in particular, I do believe it's a unique opportunity for all of us to experiment and to try to find out some new scheme and some new data exchange and data monetization opportunity that is actually not linked to making new revenues per se, but to improve the experience of a new rail, which is actually way less mature than what we know about in the card space. So this is just a food for thought for everybody. Of course, it's under discussion. It's been discussed also between many of us. But I do believe it's a very nice space to look at if we want to try to find out of the very large and broad long list of items that we've seen in the previous one, a very, very specific and urgent topic to address where open finance can actually play a transformative role in a very, very short amount of time. This was just the point, so just to give you a little bit of broad overview of what's happening beyond Europe, so to make, let's say, in perspective and to bring perspective to what we are discussing today, and a little bit of overview of the use cases, in particular the fraud space, where there is this, let's say, huge transformation happening in the instant payment, within the instant payment regulation, where I do believe everybody's trying to find some new transformation opportunity for open finance. Any questions we can address later on, of course, here to answer.
Thank you, Federico. Appreciate that. I know that fraud has been brought up many times as a challenge for new payment instruments, and looking at how potentially within the scheme itself, there's additional data sharing, there are additional functionalities that are built into the API that have perhaps more insight into transaction risk indicators, or there's a different level of data sharing across asset holders as well to help improve that. But this is one of the challenges, irrespective of the market, that all new payment instruments will have to go through. So being able to test that out, look at what that potential data sharing, additional data sharing, a priori the payment is processed, then and even a priori the merchant is onboarded, that we have an opportunity to sort of examine that again in a little bit more detail within the context of the pilot. So appreciate those insights from across the market. And swiftly on the heels of that, let's move on to what their motivations or interests and why get involved in the pilot and SPAA itself from one of the bigger players in the market. I'd like to introduce Dr. Louise Beaumont, who is the Senior Vice President of Global Open Banking and Open Finance, Industry and Policy Engagement at Mastercard. And given that consumer permission data is starting to transform financial services around the world, Dr. Beaumont leads Mastercard's efforts to shape an ecosystem that's fit for innovation and for incumbents to deliver open banking, open finance, and ultimately open data's full potential, in light of bringing the ultimate benefit to customers, businesses, governments, and the economies and societies that they comprise. Dr. Beaumont, the floor is yours.
Thank you very much. And you've made me sound impressively grown up. And I've also been looking at the slides that others have presented. I've been listening carefully to what other people have said. And I'm reflecting very much on what I'm going to share with you now, which is very much under the principle of keep it simple. And I started off by thinking about, listen, why get involved with something like SPAA at all, never mind the pilot? And, you know, for me, there are three really good reasons why you want to get involved with something like SPAA. And it's the basics. It's the efficiencies of joining that single central multilateral model for premium API access. You're saving on legal and business resources and costs versus having to do individual bilaterals and then having to support differences in your relationships going forward. So that's a really foundational, simple reason why this is important. There's the benefit of that central model to drive the quality, the reliability, the performance shortfalls, impacting all providers at once. So there's a kind of level playing field. Second, truly important reason. Third one is that you're bringing the benefits of these premium APIs and the innovations inherent within to the ecosystem in lockstep. So you're maximizing the initial enablement and scale. And that for me is another really good point, because without scale, we can't really do anything. And we need that common playing field, that level playing field, and we need significant scale. And we need it to be commercially sensible to be involved, right? Without loads and loads of costs that we're having to bear on a bilateral basis. So for me, that's the foundations of why we want to get involved with SPAA as a whole. Then I was thinking about, okay, why get involved with the strategic pilot? And for me, again, three really good reasons. One is the commercial imperative. And Ruta, if you can move to the next slide for me. Because the commercial imperative is really about, let's be vulgar here, it's all about making money. And once you've built the foundations, once you've built or connected to those APIs, it really is a marginal investment to get to commercial viability. So you've met the baseline, you've done what you need to be to compliant. Now let's get to commercial viability. So it's the foundation. It's the growth opportunity, because this is about understanding the premium space and figuring out new ways to make money. It's about benefiting from a consistent commercial model, avoiding lots of different commercial models per interaction, much more cost effective. It's about seeing open more generally as a revenue driver, because we're talking about a data sharing economy here, and that being the building block of future profitability. So for me, fundamentally, I guess the kicker is it's about embracing the inevitable. The world is increasingly data driven, and it is much better to be part of the current European best approach to foster this standardized ecosystem so you can take advantage of that paradigm shift. You've got a way in, take advantage of it, and take advantage of it before other sectors get folded into it. Then you've got not just a commercial imperative, but beginning of the next slide, which is the competitive imperative. So if we go forward one, thank you. And this is about having that first mover competitive advantage. For anybody who wants to get involved in dynamic recurring payments, but I would again expand that out into the premium API enabled space. You're getting a first seat on the bus, and you're getting that opportunity to test and learn. You're therefore, if you're testing and learning, you're best placed to fine tune your own approach, whether it's your own commercials, whether it's your use case priorities, technical implementations, any kind of issues that you want to kind of iron out. Early learnings mean that you get cleverer faster than others. Why wouldn't you want to do that? Best place to influence the evolution of SPAA, because there's a lot going on in SPAA. It's the governance, it's the scope, it's the commercials, it's the use case, it's the tech specs, it's all of the supporting services. If you're more informed, you're better able to influence. And it's about thinking of open as a customer attraction and retention tool, because we're ultimately thinking about how to build more personalized, I would argue hyper-personalized, predictive and preemptive services. So again, you've got a chance to get in there and provide more attractive services. You're more likely to attract customers to use them in the first place, and you're more likely to be able to have customers stay with you because you're able to provide that hyper-personalized, predictive and preemptive service. It's moving us on from product thinking to genuinely service-oriented thinking. And it's accepting that this is really the foundational layer for feeder. It's an opportunity to get ahead of anybody else in the FS space, to really understand how to get the most out of this. And pre-compliance ahead of PSR and a crystal ball into feeder, which is basically a sector implementation of the Data Act, seems to me to be a pretty smart thing to do. Now, there's alternatives, and that's on the next slide. And I've called this the regulatory imperative. And this is about saying, well, I don't want to get a competitive advantage. I don't want to get a commercial advantage. I'm just going to get, to wait to be told what to do, because I reckon I can string this out and just keep it as being a compliance thing. My comment there is, I know that's kind of natural behavior for lots of organizations, but you might not like the way the regulators wield the mandate, and it might be uncomfortable further down the line. I'd also draw your attention to a couple of comments that I've had from large incumbent organizations in various different places around the world when it comes to this, which is saying things like, for the last 5, 6, 7, 8 years, we've thought this was going to go away, and we could just put the gear, throw sand in the gears, make it go slowly, make it go away. And we're starting to realize that that's not going to happen. And so we might as well get involved from a competitive and commercial point of view, because we haven't enjoyed the way that the regulators have wielded the mandate. And then I thought, just on the last slide, I would give a little bit of a kind of personal perspective, and this is very much kind of a Mastercard perspective. We want to be in the mix, however it is that people want to transact. Account to account, cards, open banking, open finance, however they want to do it, we want to be in the mix. We feel that's our role. We're an ecosystem player. And we see the market shifting. We're part of that shift. And we want to serve customers however they want to be served. And we want to do it in a really cognizant, joined up, thoughtful way. And so we don't see this kind of stuff as disruption, because disruption has always got, as much as I might like the word, it's always got a bit of a negative connotation to it. And so we think of it as diversification, innovation, adaptation, because it's all about serving the evolving needs of those end users. And when Gela very kindly introduced me, she said it's about incumbents. She said it's about innovators, and it's about the societies and the economies that they comprise. And I guess my last thought, and we can clear the slides at this point, my last thought, it really is about how do we think about those end consumers and small businesses, and how do we think about how this aggregates up to better, greater, more significant value for us in Europe, to make our economies and societies better places to be, more economically active and more societally cohesive. Thank you, Gela.
Well, thank you, Louise. Unfortunately, the audience is now going to have to suffer through my presentation, which is why I embrace open banking in the first place. But again, I'd like to remind you, if you've had any questions from the previous presenters, to please use Slido and submit those questions. We've had a number of them come through, and we've got plenty of time to address them after I close my thoughts on open banking, open finance, and open data in general. And I want to ensure that you have the time and space to propose those questions and to get some clarification on any point that's been previously made. So in light of that, I'd also like to start in on my particular set of thoughts, which is very much around why open banking and the SPAA scheme are the foundation for data sharing economies in Europe. And the first point is very much this: data sharing economies are here to stay. It is not something that is going to go away, as Louise has mentioned. It is proliferating in a way that I don't think a lot of people are aware of. First off, there are 80 other markets globally that have a formal regulatory framework already in place for open banking and open finance. And all of them have an eye on the long-term expansion to include other sectors, which is more commonly known as open data, I'm sure you know. In a number of geographies and markets, there are legislative bills going through process that give other powers to regulators in different sectors to start to mandate the data sharing of those particular sectors, including retail, transportation, energy, communications, in some cases, health as well. And all of these are moving at pace. They've been looking at open banking as the foundational starting point for how to build on data sharing economies. And as Federico mentioned, there's an extraordinary amount of impact to the overall GDP and individual country profit and loss statement that come along with these data sharing initiatives. Fact of the matter is, PSD2 is not going away. It is evolving into a new set of PSRs. There is also a new payment service directive, the third one coming on its heels. These are all in preparation to deliver on the Data Act, the Financial Data Access Scheme, and FIDA being part of that. It's clear from that as well that there will also be two tiers of data. One that is mandatory, and it's a mandatory set that must move for free at the customer's direction. And there's another set, another level, which is the commercial layer that affords both cost recovery and a revenue in its movement. And this is what we're looking to build as an industry, as the second tier, moving beyond compliance into something that does actually generate revenue opportunities for asset holders who sit on extraordinary amounts of insight and intelligence around the consumer, be it a small business, a corporate, or an end retail customer. And there should be an opportunity for those institutions to make money off of those insights. It's not the raw customer data. You've got to move that for free. But you should be rewarded as an institution for those intelligence insights that come along with really knowing the customer on a very granular and detailed level. And there needs to be a foundational layer in how we start to build those commercial and premium APIs. The interesting thing about this is that FIDA fundamentally goes beyond compliance, and it does go into the commercial space. And regulators expect that firms participate precisely because there is incentive to do so. And why would they get in the way of making a market? And that's the caveat. If the market doesn't figure out how it wants to collaboratively roll out FIDA, regulators will ultimately interfere. And this is the challenge. There's a regulatory imperative for them to come along at a certain point to get the action going. It's in our collective best interest to coalesce around an approach that makes material and commercial sense, but that also fosters, again, a great deal of competition as well as innovation to drive ultimate benefits to the end consumer. And regulators have acknowledged that the SPAA scheme is the template for how open finance and open data, those particular use cases will develop, as well as the framework, the commercial model, and ultimately the data access scheme itself. Essentially, this is an opportunity to front-run regulation. It provides an opportunity to get ahead of future compliance requirements and to take advantage of the revenue opportunities that exist. Thank you, Rita, for actually following that along. That's precisely the point that I want to land. This is really important in understanding how to leverage your already existing compliant investment in those APIs. How do you move beyond just that compliance investment into something that actually turns it into a proper line of business? Participation in the pilot allows you to test what this would look like. The rulebook exists. It's a matter of metal testing it, understanding what needs to potentially be recalibrated, but it is a whole and complete starting point. It allows for the technical pilot. It allows for that testing that we've got the right standards in place for the APIs. It allows for those functionalities to develop as they need according to each use case that comes into play. But then it also gets us to the point where we can validate the commercial framework that's been thought through. Shall we go into the next slide? Thank you. First mover advantage is really important for actually capturing market share. When customers have been anticipating a particular type of new instrument or a new service that materially impacts their ability to manage their cash flow in a much more cohesive, smarter, and anticipatory predictive way, it allows them to have same-day settlement. It means that they can have better control over their business, and they're offering another payment option to their end clients. Those merchants are quite interested in getting their hands on this particular opportunity. The point is, merchants are very much in interest in offering A to A because the end consumer wants it. A few things may have to be worked out in terms of protections, be it purchase protection rather than payment protection, as those already exist within the regulations. But the fact of the matter is they want to roll this out. And those institutions that offer those opportunities first are going to actually attract merchants. There are those who have already implemented them in advance, and I'll give you a use case in just a minute. But it's an interesting way of helping each of those merchants actually make better use of their cash flow as they can see it in real time, but also to understand their operational cost and payment processing. One of the things that this will fundamentally disrupt is interchange revenues, both from an issuer and an acceptor side. And there's a way to arbitrage that using A2A payments that allow for a better optimization of that spend and payment processing on the merchant side, but also in the payment processing on the asset holder side as well. So there's imperative for the merchants to get their hands on this new instrument, but there's also a reason for banks to play in that space as quickly as possible in order to capture those first moving merchants then themselves. So next slide, Ruta. This is the other thing that's really important, is because the market is changing so rapidly and merchants are very much aware, as are corporates, that they can lower their payment costs overall. They'll move to those providers who will, whether or not you decide to move, they're going to. So you may not be the disruptor of the model, but the merchants themselves are, and they certainly won't wait for you to respond, because the market doesn't wait for the last adopter in order to fundamentally shift. It initiates that itself and it moves at pace, and those that are left behind are just that, left behind. Ruta, can we go to the next? So as Louise mentioned, there are a number of commercial opportunities to leverage balance sheet growth and revenue opportunities within the context of the PSD2 investment already. And this is fundamentally about what, where this stuff lies. Let me give you a couple of ideas. We're looking at deposits and savings and the ability to track recurring deposit from competitors using dynamic recurring payments and retaining customer savings deposit within your own organization using automated payments, those account-to-account payments. If you do nothing, you're fundamentally losing out on those deposit balances to challengers who leverage that functionality under the scheme. Retail and SME lending is a fantastic use case of understanding how you can actually move your lending portfolio into a robust space using open banking. Part of this is more accurate affordability assessments, increasing those approval rates using transactional data, and risk decisioning that's based on the open banking data that can move freely, and it's at customer's choice. There have been a number of studies done and pilots done across different markets that prove that the automation using open banking data and using that payment data in specificity for risk analysis and embedding that in the loan application flow actually improves not only approvals because you have a better affordability assessment, but conversion in terms of the customer experience. If you do nothing, there's an opportunity for you to miss out on the opportunity cost of losing those potential loans to your SME market in your space. Interchange revenue I've mentioned before, but using partnerships with those third-party providers and offering those different diversified payment instruments within your particular line of business, you can reduce the interchange costs for inbound payments and mitigate some of that cannibalization revenue that's obviously going to happen when others start to shift from cards to A. The challenge is there's potentially less interchange revenue, but there's a lower cost of open banking payment offered by the competitors. You're going to be losing out on that anyway. And this also means that you have a diversified portfolio if you offer account-to-account retail payments. And we've also looked at account opening as a use case. The authentication component, as Joe mentioned earlier, the SCA, and the consent user experience has been improved dramatically over the course of the last few years, but that eases additional cross-sell and upsell of account opening and different service opening. And using the open banking channels to do just that means you can better retain customers, but also leverage the investment to get them to adopt other services and products across your portfolio. It would be a shame if you missed out on that particular opportunity. The thing is, if we want to move to the very end, yes, thank you, Rita. Move on to that last slide. Let me wrap this up. The pilot itself, as we've discussed, and as Heisen Arturo mentioned in the beginning, it really is about testing out the rule book that's already been comprised, the commercial framework that's been, and pricing that has been worked on, and leveraging the compliance investment to move it into the commercial space. It is about getting ready for open finance at scale. It does matter that we have scaled participation as well, because again, the first movers will have the better chance of capturing market share as they deliver new and innovative products and services to the market, to their merchant clients, to their corporate clients, SME clients, and their end retail clients. But it allows us to explore new revenue streams. And fundamentally, as Louise mentioned in some of her closing remarks, it's about servicing the customers they want to be serviced. It's fundamentally meeting your customers where they already are. And that's the most important part as we shift to this very much consumer and service-centric approach. Those are my closing remarks. And I appreciate the time that you've all given and for the previous presenters as they have illuminated exactly why they're interested in participating in SPAA and specifically around their interest in the SPAA scheme itself. At this moment, I'd very much like to open up the floor to a few questions that have been asked. And I'm going to start off with the first one that has actually come through. So one of the things, and I'm going to directly answer this myself so I can move on to the other bits. The 5 asset brokers that have been registered in the scheme, could we possibly indicate which countries their respective headquarters are located? This particular information for the particular participant that has asked this question, the scheme participant list is available on the EPC website, but to shortcut this, the countries of headquarters are France, Germany, Ireland, Sweden, and Lithuania. So it is really a truly pan-European set of asset brokers that have come to the table. I'd like to move on to this particular question, since SCA has been an interesting topic. And Arturo and potentially Joe, if you can address this. Given that bank authentication has been seen by many TPPs as an issue for user experience, did the scheme standardization shift the liability to the TPPs? And if so, why not?
I'm not sure I fully understand the question, but there is no liability shift incorporated into the scheme. Basically, you would just be using the capabilities and the information provided by the asset holder, by the asset broker, in order to provide whatever services deemed appropriate. And KYC could be one of them. But there's no liability shift envisioned in the scheme for the time being.
Thank you. I think that does address it, given that the liability itself hasn't shifted from SCA. Through that, it's a user experience question. Joe, maybe you have some comments to add.
Yeah, I think from a legal or regulatory perspective, the liability doesn't shift, but I do think it heightens the importance of getting it working basically properly and optimizing it, because the incentive is now there. It's a very clear financial incentive. There's a revenue generating product behind it. And but if the end users and if the consumers are not getting through the flow, if 100% of those interactions or payment initiations are not converting through the SCA phase, well, then there's a very direct incentive for the bank in this case to address that if there is any problems in that user flow, because revenue is being lost on every failed transaction, let's say. So I think it definitely helps address it, and it definitely offers an important incentive to prioritize fixing and optimizing.
Thank you. We've had another question about, and I think, Gijs, this might be for you. So and Christian also, if you can address this. What is the incentive for issuing banks to invest in SPAA? And what will be the brand for consumers to recognize that they're paying using this payment method?
The branding issue, we haven't thought about that particularly yet. I think it is the SPAA scheme. It could be different brands. I mean, you can of course envisage that multiple schemes could be built on top of SPAA and could be branded with, let's say, SPAA inside for different functionalities. But the incentive, of course, and that's the most fundamental thing we established already 4 or 5 years ago, before the scheme was even developed by the European Payments Council. In the report of the Euro Retail Payments Board we produced, that the fundamental added value of our approach was that one of the reasons PSD2, let's say, failed was because banks had to give away basically their crown jewels for free, as it was perceived by the banks, with providing not such a good incentive to provide good APIs, good functionality, and the only way to solve that is to make it attractive also for the ASPSP. So the reason why it is attractive, you have to be compliant anyway with PSD2. PSR is on the way, FIDA is on the way, so you better start making some money on top of what you have to do from a compliance perspective anyway. And our true belief is, and we've done some studies and we've shared it with the MSG on what it takes to go from SPAA compliance to PSR compliance, from PSD2 compliance to PSR compliance to SPAA compliance. And the cost should be pretty marginal on top of what you have to do anyway from a compliance perspective to really go to the more rich functionality and then make some money and make everybody happy.
Kristen, that also may be a question for you. What's the incentive to invest in SPAA if there isn't necessarily a brand association with this just yet?
So obviously it generates a new stream of income. As it was mentioned earlier by myself, as a financial institution, you have to ask yourself, what are the distribution channels for my assets? Yeah, and there are many fintechs / asset brokers in the market that do have strong brands and have creativity to provide specific solutions for any kind of asset user, be it merchants or whatsoever. And the creation of this proposition, including a branding, obviously is a responsibility of the asset broker. And at the same time, while in particular where it comes to transaction assets, authorization is required, financial institutions like our organization, they will perform a strong customer authentication. In our case, we do this in a decoupled approach in our authentication app, and this is the place where we can position our brand to make users aware that this is the service that is also provided by the German saving banks. I think there could be benefit, and I think, Heis, that it was what you hinted to. There might be benefit in creating an overlaying a SPAA brand that asset brokers could use to literally indicate what are the standards they use and help consumer recognition. But this is an open point. I would see where it comes to the core actors, there's ample opportunity to position their brands along the value chain.
Thank you. Joe, you've got comments as well.
Yes, thanks, Gela. I think from a brand perspective, it's quite important that, it's actually the bank's brand in many ways that's benefiting from this, because if we come back to what the consumer is seeing when they make a payment online, generally they're at a checkout and there'll be a list of a payment selection, and it could be cards, it might be PayPal, depending on where you are in Europe, it might be Swiss, Bizum or Ideal. And then there's an option somewhere that will say pay by bank, which is a very, more often than not, it will be pay by bank. And that's a very literal description of it. And as soon as you click on that button, you then have a bank selection screen and you choose your bank, which is, again, it's the brand that you're trusting. Maybe it's the bank you've been banking with your entire life. And again, it's redirecting you through a flow, which is something that you're familiar with. And there's nothing new or there's nothing strange happening. This is my normal flow into the app. I arrive in my app. It's a seamless app to app redirect. And I see my payment is pre-populated. Yes, I want to buy a pair of trainers online.com for $100, press accept, and it's done. So I think introducing an extra, I don't think, from our perspective, I don't think there will be a very large benefit in a consumer-facing brand and pushing a consumer-facing brand for SPAA, because we already have brands in the flow that are known and trusted. And in many ways, the underlying premise of account-to-account open banking payments is to take unknown entities out of the mix and have people focus on the brands and financial service providers that they know and trust, and just get that working as good as possible.
Well, that seems like it's pre-answering. It's a pre-answer to another question that was submitted regarding branding, which is part of the success of other international A2A schemes. For example, Unified Payment Interface (UPI) in India and PIX in Brazil has been a consistent consumer-facing brand or trust mark. And would there be any value in having that trust mark if it is, as Joe mentioned, pay by bank, and it is your bank institution that you click on when you're afforded the opportunity at the checkout? Any other comments on that in light of UPI or PIX? Because the SPAA scheme overlay, or the SPAA scheme as an understood approach, also has some potential brand value there.
Ooh, I'm not sure. This is a discussion we still need to have. The fact of the matter is we do not have a brand that we're gonna build or load right now. So I'm not sure, and of course it's not comparable with PIX, which came from 0 to 1,000 kilometers per hour in no time, like UPI did, from a much different regulatory push, if you will. So we can consider it in the MSG, of course. One thing, though, I would like to add also on the SCA thing, there is a functionality in the rulebook which is called delegated SCA. So even based on bilateral, if in optimized flow, just to bypass any friction in the SCA redirection or whatever, we also have foreseen the possibility to delegate the SCA, and then, of course, there would be a liability shift.
I think that's a much more nuanced question when we're talking about delegated authority.
Yeah.
Joe?
Yeah, I think, one point here will be perhaps what's behind the question, of pushing a brand, and is it about, is it a brand to help drive adoption? But I think one thing that you actually said, Gila, earlier, which we found extensively over the last 4 years, is that these innovative payment methods, demand is driven by the merchant, 100%. So the merchant is the one who's responsible for putting them in front of the consumer. And once you design a positive experience for the consumer returns. So I think actually the brand is a little bit of a red herring, because our experience over recent years has shown, you know, if a merchant has the opportunity to put a very positive, high converting payment method in front of the consumer that's low cost and reducing their fraud, they will do it. And then the consumer, once they use it and they have a positive experience, they'll return to it. And that's a kind of a virtuous circle. And eventually the share of checkout of the alternative payment method tends to go up. So I do acknowledge trust is super important, perhaps the most important in payments, and trusted brands are important. But I think again we have that trusted brand from the consumer perspective, which is the bank itself. In addition, of course, to payment networks like ourselves that are increasingly visible. But I do think that perhaps the brand itself from a consumer facing perspective is not as important as people may think for driving demand and uptake of a new payment solution.
Thank you.
I would like to add, Gela was agreeing with everything that has been said so far, and as hinted by Gijs in some way. There's no reason why you could not superimpose other schemes on top of SPAA, and I see no reason why brands like EPI or PIX that were mentioned earlier could not be built on top of what SPAA delivers.
Yeah.
Well, this is. Go ahead, Gijs. Sorry.
Yeah, sorry, indeed, just picking up on that. So the beauty of it is, I believe, it is the raw material, the harmonized open banking functionality. And if IKEA wants to have an asset broker delivering its pay by bank and they call it IKEA Pay, but based on SPAA, that's okay too, right? So I mean, you can do anything. It's flexible. So, or if a certain coalition in any geography wants to have a sort of regional solution and brand it their way, fine too. So it just provides the flexibility to use it and brand it whichever way you like. And the trust comes, as Joe says, because it's ultimately a payment made from your at least the payments initiation part of it is trusted by a trusted own bank. And that's another discussion, of course. To what extent do people still trust their banks, et cetera, but let's not go there.
But this actually is an interesting building block into the next question, which, if you're looking at, can SPAA be a foundational layer for other schemes to be built on? This sort of leads to, how does SPAA view its role in FIDA, and specifically the standardizations of the national variations of financial products? So moving beyond just payments, could this also be a building block for mortgages or individual savings accounts or other types of credits, other different services? And yeah,
well,
Gijs and Arturo.
You want to take a go at it, Gijs? I'm sure Christian will also be happy addressing this one.
We have to take another hour to explain this. Yes, the framework can be reused. But we, as we say, we are payment nerds. We are not mortgage nerds. We know zip about mortgages. So it takes another ecosystem, other actors to build the scheme itself, right? But the model, that's why we made it as agnostic as possible, and we call it assets. The assets will vary, but that's also where our knowledge ends and other stakeholders come in. We are the payments guys. We do the payment assets. Others do the mortgage, insurance, whatever assets.
Then let's talk about the ecosystem then from that perspective. Louise, I know you've got some thoughts on this.
Yeah, and I think it's really important the way that Gijs described that, because it's like a great base layer, and we should never take away the right or the opportunity of the market to step up and deliver. This is about incentivizing the market to provide schemes just as much as it is incentivizing the market to provide any other products or services which are going to deliver for those end consumers, businesses, the economies and societies that they comprise. This is about the market stepping up.
If I may add to that, the issue here, so from day one, and as I said, Gijs and Christian can both attest to this, we took into account that ideally SPAA would be extensible to beyond payments within banking and to beyond banking. So the foundational layer of the bricks are there. We need to extend it functionally, and as was said, we are no experts beyond payments. But there's also a governance issue. So there is something called the ERPB, and there's something called the EPC that became ideal host for the investigation phase and for the operational phase of the project. The issue is finding the right governance shelter for these to extend beyond payments. But other than that, of course, that's the idea, and the potential is there.
Thank you. I think on that note, we'll acknowledge
can
that
I make one last
time
remark?
is up. Time is up. But here's the thing. I'm going to invite all of our audience to reach out to learn more if they've got questions. There is plenty of information online at the European Payment Council and the SPAA component of that, that there's opportunity for each of the audience members to reach out and ask specific questions and to dive into it a little bit more deeply for their own benefit of understanding how their organization can properly take advantage of not only being members of SPAA as an MSG or an interest group member, but also as a pilot participant. I want us all to thank each of the panelists that have presented today, from Arturo and Gijs to Joe and Christian to Federico and Louise. Thank you for your expertise, your time, and your insights, but also thank you for the audience for showing up, for engaging and asking some very insightful questions. But we encourage you to not let this conversation stop. There's more to be said, as Gijs has proved, but there's also more to explore, and we invite you to do just that. The webinar will be available. It will be published fairly soon. You will, I'm sure, receive an announcement of that, but take some time to review it. There's some specific points that should land within your own organizations, and we hope you take this conversation forward. Thank you so very much to each of the panelists and to the European Payment Council for hosting us today. Have a fantastic rest of your Tuesday. Thank you.
Thank you, everyone.
Thank you so much.